Hey guys, Joseph Henson here with Henson CPA Group, continuing our conversation this week over the IRS, what they want, what they've done, how things are going. As always, my link for a direct call is below. It's tagged. Feel free to reach out that way or via email, joseph@hensoncpagroup.com. But let's go ahead and get started. The IRS doesn't care about intention. And why is that important? Again, I'm Joseph Henson, CPA with Henson CPA Group. Thanks for joining me, and let's just see how this goes today. Most IRS problems start with good people. The majority of IRS issues involve you didn't mean to do something, you didn't actively try to misrepresent anything. You have a growing business, and that brings a lot of changes. You're an overwhelmed owner of your business, and then you've made assumptions. It's not fraud, it's not criminal behavior, you're not bad people. Most IRS problems don't start with bad intentions, they start with a blind spot in your company, and that is the issue. But the IRS only sees what it can verify. The IRS doesn't know what you meant to do. They don't care if you meant to do X if you did Y. They don't care what you plan to do. And they don't care what you thought was happening. You thought this was being done. It wasn't. You thought payroll taxes were being withheld and submitted. They weren't. You thought you had estimated tax payments happening. They weren't. The IRS sees the filings, monthly, quarterly, weekly, yada, yada, yada. They see your payments. Is this an estimated tax payment? Is this a federal tax withholding? They see your records and your documentations. The intentions are invisible. The documentation isn't. And that's the thing that they're going to want to go off of. Where owners get caught off guard. The common assumptions are my payroll company handles that. It doesn't matter if they're supposed to handle that or not. You are responsible for it being handled. My bookkeeper takes care of it. This is one I've heard a lot. Well, my bookkeeper does sales tax. The bookkeeper is saying, hey, I'm recording the sales tax payable. That's on the office manager to submit. It doesn't matter to the IRS who you think is taking care of that if it's not being handled. Someone would tell me if there was a problem. People don't like to say when there's a problem unless they have the solution. Or we've always done it this way. How you've always done it might be wrong, and that's something you have to understand. These assumptions feel safe until they are tested. And when they get tested, that's when you find out if there's a bigger issue. Delegation is not the same as visibility. As a business owner, you should delegate. You are not responsible for everything every single day, even though the main thing you have to worry about is that it's getting done. You need to be able to delegate these other tasks to people who are qualified to handle it. But that doesn't eliminate the responsibility of overseeing it. Many owners confuse delegation with oversight. At the end of the day, while you might not be responsible in your company for making sure it's handled, whether that's payroll taxes being submitted, whether that's estimated taxes being submitted, you have to be responsible to make sure it's been taken care of. The IRS allows delegation. It doesn't transfer the fact that you as the owner are the sole one responsible, even if it's wrong. Small blind spots create big problems. What are some of these? Payroll deposits. If you don't have a process of cleaning out your balance sheet and making sure these payroll deposits are happening on a weekly, monthly, whatever basis, that's an issue. Missing notices. If you don't open your mail, if they're going somewhere else, that is an issue. Incorrect classification. This can be as simple as you have a contractor that you have been paying as a 1099 when truly they're an employee. And then filing gaps. You miss filing periodically, you try to catch it up later, that's still a problem, and it's going to be an issue. The issue isn't usually one massive mistake, it's a compounding of multiple small issues no one has noticed, and that's when the IRS gets involved, whether that's federal or your state Department of Revenue. The cost of assuming everything is fine. Many owners only discover there are issues when the notices start to appear. There are penalties in arrear. The lenders ask questions, or buyer's review financials. I can give a great example of the lender asking questions. We had a client a few years back who was trying to get a loan for an item. They were told by their bank, hey, we can't handle this. You're losing money. The business owner came to us and said, I don't understand what's going on here. How are we losing money? We've had a bookkeeper handling this. We had another CPA firm handling this. They've never said there was an issue. And the problem was cash in the bank was there, but they were losing significant amounts of money because they had payroll taxes that weren't being paid. That creates an issue. This isn't the only one. I've done this with dozens of clients who come to us to fix that problem. It's nothing to be embarrassed about, but it is something to fix. By then, though, the issue has usually existed for quite some time. If you've gotten a notice, it's been going on. If there are penalties, it's been happening. The lender asking questions, this isn't new. If you're not going and getting lending every few months, this is a problem that you have to address. And then when the buyers of your company, because you want to sell, you want to retire, you want to do this, you want to do that, they start reviewing your financials and you say, hey, I don't know why my sales tax payable hasn't been cleared out in 3 years. I don't know why my payroll taxes haven't been cleared out. I thought it was being handled. That's when you know something has to change. What strong businesses do differently? As a strong business, you are not assuming. They are going to verify. How do they verify? They review reports, payroll, filings, and financials. What kind of reports? Payroll reports are a great example. Our gross payroll was $10,000 this pay. Our net payroll after all the other things was $8,000. Where does that $2,000 go? Well, we owed $1,000 for federal taxes. We owed $500 for state taxes. We owed X, we owed Y, we owed Z. Great. Is that reflected in the filings at the quarter? Did they actually do this appropriately? Do you see that money coming out of the bank and going where it belongs? Now, you're reviewing this not because you expect to find problems, but because the visibility truly matters. If you do not have systems that you can trust, you have to be able to verify the results. Build the systems, verify. Trust but verify. The difference between reactive and proactive. Reactive owners will discover problems later after it's already been an issue. They will spend time fixing issues and they operate from the surprises that are drawn up. But as a proactive owner, you identify issues earlier. Within weeks, if not a month, you have an issue identified and you're starting to ask questions sooner instead of just relying on your CPA to say, why is this off? Or your bank lender to say, hey, you have such large balances here, something's wrong. And proactive owners make better decisions and are able to plan better. The real lesson isn't that the IRS, it's not a lesson over the IRS. It's a business lesson. It creates the visibility that you need to formulate an option. And then there's the assumptions that create risk. Most owners aren't going to get into trouble because they didn't care. They get into trouble because they thought everything was fine. I have an office manager. They're handling this. I have a bookkeeper that I'm paying $200 a month to. They handle this. I have a CPA who does all my year-end stuff. I have a X. I have a Y. That's not good enough. And that's the true lesson. You as the owner have to be taking action to verify what you see. Now, here's what most owners truly need. It's not more tax knowledge. It's not more IRS regulations. Usually, an owner needs visibility, accountability, a system they can grow on, and then a regular review. That's what prevents surprises and allows you to continue growing without stressing about what's going to sneak up on you. If you've ever wondered, is everything actually being handled correctly? Are there blind spots that you don't know about, or would you know if there was a problem? These are the types of questions we help business owners answer. Again, I'm Joseph Henson with Henson CPA Group. My email is joseph@hensoncpagroup.com. My booking link is down below. If you need anything, please reach out. Happy to chat.